Hello viewers, I hope you are all doing well. Today we are excited to bring you our report on the real estate sector. India is now entering a golden period for organized real estate developers with strong balance sheets, ethical promoters, a good brand reputation and large land pools. So we present to you at the right time Indian real estate building towards the next housing super cycle. And in the end, after this report, we will share our top picks in the sector. So watch till the end.
So, a pre-pandemic demonetization and RERA had begun to weed out weak players in the real estate sector. We expect our top real estate companies to capitalize on the opportunities in order to continue their sales momentum, supported by their strong launch pipeline of projects. For the middle and upper middle classes, real estate is now an aspiration, bordering on necessities. Owning a larger, better house has turned into a need, and this is being fulfilled by housing finance sustained by elevated income and saving amongst a younger set of home buyers.
Real GDP is on a strong trajectory once again. Real GDP is expected to sustain strong growth after a pandemic-induced dip in 2020. The real estate sector, along with its ancillary industries, is a significant growth driver for the Indian economy. And as the GDP grows, the sector is expected to benefit strongly.
And a rising per capita GDP alludes to a general increase in wealth and income. Income have been generally increasing at a higher rate, which will have lead to more savings and higher ability to fund consumption. Domestic consumption is making a strong comeback, traditionally one of the main drivers for Indian economic growth. India is entering the demographic dividend phase. Now, what is demographic dividend?
The demographic dividend is the economic growth potential of a country that can result from shifts in its population's age structure as the majority enters the highest productivity phase of their lives, which is between the ages of 35 and 55. Now, many Asian countries were able to use the demographic dividend in the 1970s and 1980s to enhance economic growth and general lifestyle improvement, as a majority of the population was in the young productive phase of life. India is expected to follow suit. Demographic data implies that India, with one of the largest and youngest workforces, will be a huge market for both residential as well as other asset classes going forward, as has happened in the past in developed nations.
Now coming to employment. Employment is recovering to pre-COVID levels, leading to income stabilizing. Inflation is expected to brought under control by the RBI. Interest rates are rising, but are not excessive high. They are currently still below their historical average. Meanwhile, mortgages, an important component of economic activity, increased more than tenfold in India over the last decade, but remain low as a percent of GDP when compared to developed nations.
Let's do an Indian residential real estate sector overview, which has been maturing over the past decades. See, the Indian real estate sector has transformed as a result of multiple reforms brought in by demonetization, the NBFC liquidity crisis of 2018, RERA, GST, and IBC, amongst others. So, over the last few years, these measures have helped fortify the sector and instill transparency, accountability, and fiscal discipline. The COVID was a tipping point for many first-time buyers, whose buying decisions were supported by the record low interest rates. Hence, after a dip in mid-2020, housing absorption rebounded. New launches outpaced pre-COVID. Sales of all big listed real estate developers have been rising in FY22, and the momentum is expected to continue in FY23 and beyond.
We see a marked improvement in the prospects of real estate as the volume and pricing are witnessing an uptick across geographies. Consolidation in the residential real estate sector is expected to continue, leading to an increase in the market share of branded organized players. Inflationary trends indicates that property price rises are inevitable in the near future. In the last year, amid offer and discounts, many developers saw their stock being cleared following the pandemic surge in the housing demand, giving them the leverage to raise prices. As per our channel check, it suggests that the new pandemic-infused desire for home ownership should remain strong throughout the year.
Average inventory is high but falling, which is indicating that new supply is being readily absorbed. Unsold inventory has witnessed a gradual reduction from 2017 to 2021 due to absorption levels being on the higher side as compared to seen during new launches from 2017 to 2020. Currently, financing of real estate projects is cheaper for reputed developers whose pre-sales are strong.
And as far as demand is concerned, the GDP growth, whilst strong, fails to do justice to showcasing the strength of the demand. The top 1% hold 22% of the wealth and the top 10% hold 57% of the wealth, according to World Inequality Report 2020. Supply and absorption have been in tandem. There seems to be little excessive inventory, resulting in home prices rising pan-India. Strong demand is expected to be catered by strong supply. A recent livability report showcased growth in aspiration. 80% of buyers considered it important to have a home as a place to maintain their health and mental well-being.
More than 80% of home buyers prefer their homes to be surrounded by open spaces and greenery, both inside and outside their homes. Greater emphasis is being put on amenities and in-home setup for work and online classes. Hobbies and passions have gained more prominence since the COVID-19 pandemic. The proliferation of remote and hybrid working models has further led to greater demand. Hence, first-time young buyers are now preferring maybe compact apartments but with an extra small room to accommodate work from home, as well as houses which offer better facilities such as gym, swimming pool, etc.
Now let's discuss what are the topics in our real estate report. Our first topic is Godrej Property, the bluest of blue chips in the real estate. Godrej Property is the real estate development arm of Godrej Group. In our opinion, it is the strongest pan-India player because its business model is shifting from an asset-light JVJD model to outright land purchase and project development. It has access to several land parcels owned by Godrej Group companies. Godrej Property has a strong earning visibility and expect to deliver 10 million square feet and take on 15,000 crore worth of projects in FY23. Strong reputation and proven track record. We ascribe an outperform rating to the stock price with a target price of 1646.
Our second topic is Mahindra Life Spaces Developers Limited or MLDL. It is a subsidiary of Mahindra & Mahindra and it is engaged in real estate and infrastructural development business in India. We have a positive view on MLDL due to number 1, its upcoming launches in the mid-income segment. Number 2, a good debt-to-income ratio. Number 3, expanding geographical coverage. Number 4, strong brand visibility. And number 5, changes in top and operational management which helping in its growth trajectory. We ascribe a target price of Rs 610 to MLDL.
Our next and third topic is Shobha. Shobha Limited is a real estate developer. It operates through two segments, real estate and contractual and manufacturing. We start coverage on Shobha Limited with an outperform rating and a target price of 857. Due to its regular debt reduction plan, Shobha has a large land parcel of 2200 acres. The company is looking to push for new launches aggressively in the coming year.
Our fourth pick, which we will discuss, is Macrotech Developers Limited, which engages in construction and development of residential and commercial real estate properties. We have a positive view on Macrotech due to its strong market position in the MMR region, reducing debt and interest costs, its entrance into other tier 1 markets after Mumbai metropolitan region, and finally, its healthy industrial revenue visibility. We ascribe a target price of Rs 1039.
In a nutshell, To conclude, the story of the real estate sector is exciting and encouraging. As the pandemic is coming under control, we are seeing a strong recovery in India. In the last 6-9 months, input cost for the cement and steel prices roses, but the market is in an upward cycle, which bodes well for organized and branded real estate players. The greatest mark of confidence has been the strong pipeline of new launches, surpassing pre-pandemic level. The trend one is seeing is that income are rising faster than the real estate prices, and therefore affordability should not be impacted. Furthermore, we expect the real estate sector is now moving in a direction where consumers prefer to deal with a reputed developer project, even though they come with premium pricing over organized or local developer. The sweet spot for housing is still in the price range of 50 lakh to 1 crore.
So viewers, I hope this video is informative for you all. For any doubts, please comment below, and also don't forget to subscribe. Thank you very much.
Thank you very much.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.